Here we go. Stocks by the numbers. Welcome back. And we had another big red day today. If you watched the video yesterday, I drew out some trend lines. I was talking about some potential big pullback support levels that these major indices were going to hit and potentially break down through. And we can just quickly look at that. But someone asked me to do a quick update on Enovix. So we'll get to that in a second. But again, 1 year chart, you could see these are some of the trend lines I drew out in yesterday's video. The markets were here, and I mentioned that we could see the drop down and we could start to see the tests and the potential breaks of these trend lines. You can see the S&P clean broke straight through both of these trend lines and now heading towards the bottom one, which I need to make a different color so I can tell where the hell is going on. Okay, so that's from March 13, 23. Across the bottom, October 27, 2023, for your point of reference. And as you see, hypothetically, if that happens Monday, immediately, that would be about 260 points, 270, additionally, off of the S&P. And of course, you can see before we really took off, you can see how we tightened up right here? And the top of that range is what, like 4790, maybe about 4800. Bottom range 4686. So yeah, mid-range right about there, you can see on the 1 year with the fib is about 4746. So those are the two levels, in my opinion, that now you have to watch, right? Chances are we did really chunk down the last 2 days. So that whole, buy the dip that everyone had trending yesterday for today, which obviously didn't work out very well, that may happen Monday now, right? So Monday you might see it run up right in the morning after the open, right? Futures might be up. It might want to run up and retest like this level or this level, and then it might reject and like hang out in there. And then maybe Tuesday it'll come back down, so you might have that small relief bounce on Monday. But again, I really hate to rub salt in the wound because I know it really sucks just seeing like a lot of your gains just instantly wiped out. But I have been saying this for quite some time, and in all fairness, again, it's not even about political for the most part, but one side just continuously saw that the markets were climbing no matter what was reported over the last couple of years. Now that they bring Trump in, that's why I said, if Trump wins, markets might actually drop. Trump starts signing executive orders, markets might drop. Trump over here talking about tariffs, boom, markets drop, right? So that's why I had that feeling. But, shout out to our buddy Warren Buffett, who of course is sitting on a couple of $100 billion in cash, right? People thought he was crazy. And again, because I kind of felt that the sell-off was going to happen, that's why over the last couple of videos I kind of just began to reinstate like a lot of those old school rules, right? Again, like you shouldn't have more than like 10 or 20% of your account in any one given position. You should kind of have some hedges in place if you can. You should try to keep cash on hand, right? These are old school rules, but now you see on big drop down days like today, who are the people who are hurt the most? The people who, insisted on buying near the highs, but also people who went all in, right? People who are all in the market now got smacked up and might be back to where they started, back here. So that's why, again, I think the biggest rule, really, in my opinion, is to always keep cash on hand. Because this can literally happen any day you wake up. And you see, there's a lot of names now that I chunked down, and, now they look even more attractive. They're even more on sale, right? So people keep asking where the bottom is, and again, that's why I drew out some of these trend lines, because technically if we don't immediately bounce and get back above and close the gap and go back to business as usual, which in my opinion that's not going to happen, then we're going to keep chunking down. If we check the Nasdaq real quick, you can see I got multiple trend lines drawn out. This is going from the top here, July 19, 23. Looks like it's touching right there, November 29, 23, just cutting across those tops. And you can see that is, yeah, about 400 points about lower from where we are right now, about 17,090, 17,070. But also, again, you know, we could potentially just be in almost like a free fall mode here, right? We could be like in a downward channel where we can just keep stepping down. But one level here to watch again on the Nasdaq. This is a random trend line, so we'll actually get it out of there because I don't want anyone to think that we're due for a bounce. But you can see there's a 1 year chart. You can see the fib 17,222 for the Nasdaq, and again we have the trend line here at the very low 17,000s. So that's also right around a psychological level as well, you know, even those even numbers. So if we do approach the fib and happen to break to the trend line, we may flash crash down and actually touch the 16s again. And if we top up here and then come down here, if we, you know, now start to channel like this. Oh, man. Where is this? About 13.6. Yeah, see, also I wanted to show, see, there was this consolidation channel. You can see this was August, September, October, right? That was that 3-month period where in the Discord, if you're in there, we were playing a lot of puts, a lot of index puts, VXX calls and whatnot. And this was the downward 3-month kind of consolidation. Then you can see that's where we broke up and out. And you can see like a couple of the bottoms where there was a lot of support and a lot of bouncing taking place was at about 14,000, like 580. So that's why, believe it or not, I actually think we can start to really break these levels. Because, again, I mean, you know, looking at where we came from, just since, you know, the lockdowns, and then, of course, you had, you know, elections, but just looking at what happened over the last couple of years, and now, look, we're all the way up here, and we only chunked down, like, here. Right? So even if we pull back all the way to 15,000, let's say, look, you know, that was a key high that we hit back in 23. We consolidated and then we popped higher. Here we ran straight up to it. I mean, you know, obviously coming off those lockdowns and whatnot, we ran straight up to that level, came back, retested, popped higher, and then we started to sell off going into the new year, but then we came out even stronger, right, into the new year. So that's why, believe it or not, that might be around the key level right there. Like the high 14s, maybe the low 15,000s, which I know does seem like a lot, but again, it really isn't that much. And also, if you have cash on hand, as I say, you should be, oh, the Dow, you should be all right. But yeah, looking at the Dow, you can see also going across those tops as well, mid-August, mid-December 22, and the July 23 right across those tops. And you can see the Dow basically dropped almost exactly to that trend line. However, it did break this support trend line going back from the bottoms October 12, 22, cutting across to the end of October 23. So you can see it broke that, it's approaching that. It could get ugly. It could get ugly. I mean, in my opinion, we can easily chunk down here like sub 35K. Bottom of this this tight range here, you're looking at like 32,000. Definitely feasible in my opinion. Definitely feasible. I mean, look at what happened just in 2024 alone. So that's why, to give back a lot of those gains and like reset and then get ready for, you know, the next wave of earnings and business and positive growing economic data. That's why I was saying, in my opinion, I think it gets really rough before it gets better. But Enovix. So we're back here. We're in this downward channel, right? The stock's still technically in the channel. ENVX here on the Nasdaq. 630 down a third of $1 here today, about a 5% drop. And technically, if we extend that bottom support trend line out, you can see, let's say hypothetically it drops there Monday, right? You're looking at like 504, 505-ish. So that's your key level, in my opinion. That is, if we go back, look at this. I mean, we're talking now about, you know, 2.5, 3-year channel that the stock is in, right? So I know markets are down, so obviously, you know, practically every stock dropped. But Enovix actually not as big of a drop as you might imagine. I mean, the stock realistically is down about a point and change over the last 2 days, which isn't too bad compared to some other names. But you have this fib right here at 547, and again, bottom of the range right there. We'll just call it the very low fives, about 505. So that's the level you have to watch. Because again, in the numbers, I know they've done a couple of things recently. In the numbers, though, again, 1.2 billion, and we looked last time. We looked at the cash, we looked at the debt, and we looked at again, I see, the losses are more narrow than Wall Street's expecting. Phenomenal. But again, if we actually look at the business being done, I know last quarter they actually jumped up. Look, estimates were 8.7 million and change. They reported 9.7 million, beat by almost a million, almost 11%. And they lost 11 cents a share. Analysts expecting a loss of 18.7 cents. So very nice beat. But again, in this type of market, it's just not enough. And that's why I was saying, in my opinion, companies with the strongest fundamentals, the healthiest balance sheet, those are the ones that are going to drop the least. Those are the ones you might actually see green in a big red market, believe it or not. Those are the ones that may not break massive support levels and may see the bounces, those relief bounces, sooner rather than later, as compared to something like an Enovix. Right? Because again, we come down, I mean, 9 million, even if we extrapolate that, right? We're operating at a loss. We're still losing $3-4 for every dollar we're bringing in, right? We lost 37.5 million to bring in 9.7 million. And I understand they recently did a small acquisition to increase manufacturing over there in Korea, I believe. So that, of course, is a good sign, because I know they were projecting that manufacturing was going to pick up, and they were projecting revenue to start chunking up. I think they said, like Q3 of 25. We did an update back here in November of 24, so you can go back and double check that. But again, I said, even if the revenue chunks up 10-20 million a quarter now moving forward, you're still talking about like 80-100 million in change, right? You understand what I'm saying? And if you're operating at a loss, and we saw the equity keep dropping, I think I said that you can see this stock drop and break to a market cap of 200-300 million, and believe it or not, in my opinion, it would be justified. Now, a 75% drop from here would bring the market cap to 300 million, which of course would bring the stock down to like $1.60, which is pretty extreme. So that might not happen. But if markets really chunk down, as I'm projecting, right? Because again, you want to prepare for the worst, right? You want to prepare for the worst type of situation, have a strategy in place for that, and then hopefully if that doesn't really happen, then you're just even more better off, right? In theory, anyway. But the point is, watching this bottom key support trend line here in the very low fives, something like this could break if markets continue to drop. And you could see it plunge to like sub 4 and start dancing around this fib level here, right? And then maybe as markets stabilize, it can like flatten out for a month or two, maybe. It might take a while, and then it can slowly come back up here, especially if they sprinkle in, some earnings beats here and here. So something like this, in my opinion, you're more exposed compared to some other stocks we looked at, just because they're not as fundamentally sound as the other companies, right? Debt almost 200 million, cash 272. Okay. Debt slowly inching up. The free cash flow moving in the right direction here. This time last year, minus 56 million. This quarter, minus 32 million. However, it was a big quarter. Again, 9 million. 9.7 million. And we just looked. It says next earnings, they're looking for, like 5 million again. So, if that was just one big quarter, then I don't know how much we can read into the improvement in the free cash flow. But I'm not bashing it. Okay, debt minus cash. So you're at about like 80 million. Assets outweighing liabilities. The equity, we spoke about it consistently ticking down. We can see as of last quarter, we did bump back up, which is a good sign. 80 plus 250, we'll call it about 330. Book value back up above $1. So yeah, 230, and If we look at 24, yeah, see what I mean? We brought in 23 million, but we lost 200. So you were at plus 330 minus 200, right? You see what I mean? So in the numbers, my personal quote unquote fair value of the business is like 150 million, right? You give it some appreciation, you can call it 200 million in change. It's a publicly traded company, 400 million in change. So again, is it going to drop to a market cap of 400 million? Honestly, who knows? It could happen. That's basically my point, right? It could happen. But that was technically a good revenue quarter for Enovix. Those are some of the levels that, in my opinion, you should watch. Enovix to acquire South Korean battery facility, battery cell manufacturing assets in South Korea from Solar Edge. No financial terms were disclosed, so who knows how much it cost, I guess. Enovix said the acquisition will expand its manufacturing footprint and is expected to improve its gross margins. Very good. The company said it also expects sales from batteries manufactured in the South Korean facility to increase this year and in 2026. Okay, very good. So now we have more income coming in over the next several quarters. And of course, we're projecting that to further increase into next year. Transaction expected to close within April. Okay, very nice. Okay, the same thing. Progress on smartphone, right? Smartphone OEM. I think we did an update talking about that. Completion ISO, audit Fab 2 in Malaysia with no major or minor findings. Quote, I am pleased that our team continues to progress our most advanced smartphone agreement in line with our aim for mass production late 2025. Said Enovix CEO. Passing the ISO audit and receiving the certification was also a significant milestone, reflecting our deep commitment to quality in manufacturing operations. Spoken like a true CEO. Who's sold a couple 100,000 shares. Okay. This guy's selling shares. Wait, what was that? The 10K. Gross margin loss of 2 million. Was a loss of 55 million. Reduced production costs. That's outstanding. Loss from operations, loss of 242.7 million. Increase from 230 million previous year, driven by higher research and development expenses. Takes money to make money. Hopefully it does pay off. I know a lot of people have been holding this one for a while. So again, I hope they deliver and, start bringing in revenue for you guys. Net loss 222.5 million compared to 214 million, with increased restructuring costs impacting the bottom line. Lost $1.27 per share compared with 135. Increased shares outstanding. Fab 2 in August 24 officially opens Fab 2 facility in Malaysia. Increase in production capacity and efficiency. Fixed manufacturing R&D activities primarily conducted in Malaysia, Korea, and India, while corporate functions remain in the U.S. Aligns with the company's focus on expanding its manufacturing footprint in Asia. Yeah, I feel like we knew most of this information already. Ship samples, right? With plans for a commercial launch in 2025, right? We just spoke about that. Late 2025, they said. Significant portion of Enovix's 2024 revenue came from sales of conventional graphite battery products to defense contractor customers in South Korea, highlighting the company's diverse product offerings and market reach. Okay, so we're seeing a lot of attention in South Korea. Enovix plans to commence mass production of its batteries for smartphone customers in late 2025. The company is also exploring opportunities in the EV market through joint ventures or licensing arrangements, aiming to expand its technology's application. I see. 40 million through offering, 100 million private offering of stock. And see, this is the problem we know as well, right? That this is why technically Wall Street can continue to beat up this stock. Because by operating at such a loss, you have to consistently keep this cash on hand because you're burning through it. You have to keep, your head floating above water, supposedly. And you just have to keep, sticking your hand out, saying, oh, I need more money. Here's more shares. I need more money. I need more money. So that's why, again, technically, because the numbers right now really can't, in theory, support this type of market cap. It can easily be halved, right? That's the point I'm trying to drive home. So that's why. Look for that clean break. Keep an eye on that fib. That's the one you're going to have to watch if it breaks that. But we'll see. We'll see how bloody the markets get. We'll check stock charts real quick. And you can see, right, something like this, even the RSI down here, sub 31 right now on the daily, it doesn't mean anything. It doesn't mean anything. If we are in a fundamental correction market, right, where now it's all about attractive PEs, low revenue to market cap ratios, low fair value to market cap comparisons, right? Those are going to be the ones that hold steady or potentially even continue to grow. It's going to be the Enovixes that got overpumped and are still basically overvalued in the numbers. Those are the ones that are going to continue to suffer. And, the RSI at, 28.5 doesn't necessarily guarantee a bounce like it used to in the previous traders market, in my opinion. But RSI on the daily, sub 31. It broke the bottom Bollinger Band, 653. It's at 631. The MACD just crossed to the downside the other day, though, right? So we can continue to sell off. And you can see we were up here, and then we made, lower lows, and then we bounced, so we might make lower lows, right? We might continue that trend, bringing it down here, which would, again, bring the stock down into the 5s, approaching that trend line. Switching over to the weekly. RSI sitting right about 36. Look at how volatile the stock is, right? I know the short interest is there. Let me pull. I know that's why people are still big on it as well. But again, we just looked at the numbers, right? The way they're consistently offering shares, needing to raise cash. So you can understand why it's shorted, right? Short float, according to FinViz, is 28.9%. So almost a third of the float is shorted, which technically is a big chunk. But again, in my opinion, is justified. And this recent news technically is good, but it's not enough, in my opinion, to squeeze the stock. They need like a big order to come in. That'll squeeze the stock. That'll get you back to $10, $12, in my opinion. And I'm pulling for you. I'm pulling for you. But recently the MACD crossed to the downside here. Looks like, just about going into March. We came right below the 50-day and then rejected and just have been dropping since. 631 bottom Bollinger Band, 648. We're technically slightly below that band. Last time that happened, you can see we kind of evened and then went lower. Last time that happened, we kind of evened and went lower. Last time that happened, we flattened and rose. Interesting. It might just bleed straight down to 5. But we just had the MACD again cross recently on the daily. We have the MACD still in a downtrend here on the weekly. RSI, again, you could see a short-term bounce off that 30 RSI if some traders want to step in, but weekly, chances are it will continue to keep falling because there's still room for it to drop. Let's check the pivot points out of curiosity. Pivot point. Support level here at 601 on the weekly. We dropped to 569 and then we bounced here at 630. So that's a key level to watch there at 601. Support level on the weekly. And here on the daily, we can see we rejected, no, technically we didn't. High of 643, support level 649. Well, resistance level now. But bounced right off it yesterday, broke straight below it today. Low of 569, pivot point 563. In my opinion, that's where it wants to go. So you may see from here to here, the way it broke through and bounced between, you may actually see that tomorrow as well. and you may see a bounce between 563 and, whatever, 512 or something, right? Which would also bring it close to that trend line. I don't know. You have to see. You have to see. But again, in my opinion, this stock did seem rough in the fundamentals, and I did always kind of say, I don't know if I'd really jump into it, right? With the pops and the drops, again, if it got beaten up here, we looked at the range. If it started to come down to the 7s, the 6s, so you stepped in, and, then it spiked back up to 10, 12, so you got out, and then it pulled back, so you got in, right? If you were really timing it like that, then I'm sure it's done well for you. But anyone who's just been in and been holding for a while, like, I don't know. Again, this one, it seems like it's still going to take some time. Again, late 2025, could be 6 months from now, 7 months from now. Anything can happen. But I just want to double check. Okay, maintain buy, Craig Hallam. Price target cut to 18 from 20. Wow. That is still pretty beefy from where we are right now. Cantor Fitzgerald, $30 a share. I don't know. They had some other wild... I can't recall, right? We recently looked at another stock. I think it was Cantor Fitzgerald that had some dumbass price target on it or something. I don't know. So these companies are all over the place. That's what I mean. Where we might see value in the numbers, they undervalue it. And then something like Enovix, which needs time, in my opinion, shouldn't be anywhere near 30, and they have a $30 price target on it. Again, a year or two from now, can it get to 30? Of course, we know that. Anything can happen. Right now, you're saying it's a $30 stock? That's a little extreme, in my opinion. That's a little extreme. That's a 5X. It's a 5X. That's a $6 billion market cap. Company just brought in $9 million. Right? I mean, come on. I don't remember what we were looking at. News. Yeah, $30. Cantor Fitzgerald. Loss. Yep. Sees Q1 loss 23 to 29 cents, and this was what originally minus 18 cents. So they've been beating on the EPS losses, posting more narrow losses. Now they're saying they're going to post a wider than expected loss next quarter. Enovix sees Q1 revenue 3.5 to 5.5, estimates a little higher than 4.5 mid-range. So, yeah, I mean, again, it's not bad news until they report, these lower numbers and miss if they do. But, technically, it's kind of bad news. I just want to double check this. I'll let you go. Fab2 Malaysia. Yeah, like we said, this one could be very interesting over the next couple of years. But as we said, just even looking at their timeline, they just needed more time. They just needed more time. End of story. And that's why, again, if we're in a fundamental market now, and it's more about the actual business numbers as opposed to, what's the chart say? What's the RSI? Right? If now it's more about the actual business, well, then unfortunately right now, this is not a multi-billion-dollar business. So even if it drops to 5, that would still be about $1 billion market cap. So that's why if it holds that level and then bounces and stays in that range we were looking at, I would actually be pretty impressed. Because I would be expecting Wall Street to beat it up even more. So, I'm pulling for you guys. But again, it just seems like they need time. Invest emerging AI, smart eyewear market. Battery cell tailored for this market. This investment is expected to pay off as the market gains momentum, with new estimates projecting the smart eyewear market to reach tens of millions of units by 2028. And of course, just like everything else, right, with the phones, first we had the smartphones, the cell phones, now we have smart glasses coming out, right? I know they tried to push that in the past. It seemed pretty invasive. It did, again, I'm not trying to beat them up or anything, and I understand it's like technology, it's just the way it is, but pretty wild if you watch some of the videos. But we know that as they improve it, as they improve the look of it, the functionality of it, the convenience of it, we know that chances are, eyewear devices will probably, grow and become obviously a bigger market by 2028. To bank on something like that, I don't know, just because of the backlash I personally saw from like the Google glasses and whatnot or whatever they were. So I don't know if I bank on that, but I wish him the best of luck. Also observed increased interest from drone manufacturers and defense suppliers seeking battery solutions that comply with allied countries' supply chain requirements following the U.S. elections. Okay. 2025 off to a fair start. Yeah, see, we're going to bring in 3.5 to 5.5 million. Going to have an adjusted EBITDA loss of 21 to 27 million to bring in that 4 million roughly for smartphone battery. Converting pipeline into backlog with mass production expected to commence in late 2025. So again, markets right now might be going through their rough patch, right? So you might go down before you go up. So in my opinion, watch that low 5 level, watch some of those low even 6s levels, right? Some of the pivot points we looked at there, like 563 on the way down. You got your 547 fib, and of course your flash crash here at the sub 4. However, I will say it does sound like you might get good positive updates in that second half of 2025, and hopefully towards the end of 25, if they can get an order again for these smartphone batteries or whatever, that would be huge. That would be huge. That would instantly add much more value to the situation. So that's why if it does happen to come down here, if you want to maybe scoop up some shares here, hopefully it doesn't really crater, but yeah, you know, over time, even if it bounces and gets back in the range, you can see, look at the bottom of the screen. I'm in like the end of October, right? So we can break and we can bounce and we can chill. We can get back in October, right? All of a sudden, September, October, November, we get good news coming out. Oh, yeah, we're up and running. Oh, yeah, we might get an order, right? All of a sudden, the stock's back at 9, the stock's back at 10, right? So again, it's hard to call day by day because markets are so volatile. In theory, the stock could tank again to $3, $2, so just be prepared for that. But hopefully, they stick with that timeline, and over maybe the next 5-6 months, we get some good news updates, and the stock starts moving for you guys again. But that's pretty much it. I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I do want to wish all of you success. I hope everyone makes a couple of dollars. I hope everyone's okay. Thank you for your time. Enjoy your weekend.